What's up everybody, Tom here with another video. In today's video we're discussing how Wall Street likes to play games with us, the retail community. We're also talking about our technical analysis levels for the S&P 500, Dow Jones, Nasdaq, Bitcoin, Tesla, AMC, dollar index and more. Yesterday we saw big rebounds coming off the trend line in both the Dow and of course the S&P 500. The question is, was that just a gap close off the witching event? Or is it the beginning of a new rotation? Stay tuned to find out more. All right, everybody. Well, here begins our recap for the markets overall for the 21st of June, 2021. And you'll notice a sea of green as soon as you look at this heat map of the big companies in the S&P 500. But something did change, and that was the hyper stocks that were doing well last week, such as AMD, Nvidia, Shopify, etc., were actually down. They were ones that almost had every session green last week. However, the rest of the stocks did quite well. So is this the beginning of a new rotation in the markets? Let's have a look and see if we can figure out if it is. So here is the major indices. Russell 2000 up 2.14%, Dow Jones up 1.84%, S&P 500 up 1.47%, and the Nasdaq up 0.63%, lagging a little bit. I think we need to remember that this is outperforming the rest of the market quite considerably at this time still, the Nasdaq. When we go and look at the actual sectors themselves, you'll notice the technology sector is in between. We also had our favorite here, the biotechnology and healthcare sectors with, fairly stable returns, about 0.8 to 0.9% for the session. And energy was out in front with, of course, the financials. Coming off that huge support line that we talked about in our weekend video, it makes total sense that we would see this rotation. And this doesn't mean that the market is over selling off some of those stocks. It just means that they bounced off the first levels of supports. So we'll continue to watch that throughout the next couple of videos. We will also correct together as a community with our dollar index discussion. We talked about the 50 exponential moving average. We talked about how that on the weekly was going to act as some form of resistance. And of course, now the dollar index is declining at a decent rate, I think, overall. Now, will it stop just here around this 91.80, or will it continue to come down? If, of course, it comes down to the 91.40, there will be buyers here because that was previous resistance. And we know when we scroll it out, the heavy support that's being bought off 91.40 will be a phenomenal lever for dollar index buyers if it does get through there. We'll continue to watch both zones. If it breaks to a new high, then we expect it to go somewhere towards 93.40. If it hovers around in here and goes down to the 91.40, we of course expect buyers at that point as well. Now, it's important that dollar index did stop because this gives gold and other materials and metals the chance to actually try to create some structure here and try to find a base. And we've talked about gold's base around the 1766 a few times now. See how it's starting to formulate here on the 8 hour. If we go down to something like a 2 hour chart, you'll notice that we have a low, we have just a slight lower low, and we have this peak over here, which is right around that psychological level of 1800. Now, if we get a market closing above the 1800, what are we going to be doing? We're closing through the 50 exponential on the 2 hour chart, we're closing through a psychological zone, and we're putting in a structural base. These are the types of areas that many technical analysts and many traders want to get involved in. They don't want to necessarily catch the falling knife. What you want to be doing instead is trying to get part of the participation phase after the market has stabilized. So something around this 1800, I think, is a heavy resistance here for gold. And if it does get through that zone, hopefully it can start structuring up and then moving towards the next levels, which we'll be covering on this channel. So make sure you subscribe and of course hit that like button if you've enjoyed the video so far. Let's go through silver. Silver structuring similar to gold. We've got our heavy support, got our slightly lower low, and we've got our 2650 area for the resistance. If it gets through here, we know the recovery is in and it moves towards the 27 plus kind of zone, which is previous support. You can see it across all the way across here. So it's really the same tail, just which metal do you prefer when you start to look at that recovery phase. Now, speaking of recoveries, US oil, wow, that was a huge move yesterday. It blew through the 72.80 area, went above, and as we suspected, it would come back down and test from the top down. So this is the resistance. This is the closure above. This is the test down. Let's have a look at this on the daily now, just to get a bit of an idea. See how we closed above on the daily? Very significant. 75.76. Our long-term plan is coming out here. And it also proves another thing. Remember, you could have taken profit over here. at the 70 to 80 zone. Now, would you have been in any worse case if you were watching oil yesterday and it blew up? You'd think, oh, I missed out. Guess what? It gave you the entry. Remember, there's nothing wrong with taking profit at the key zones and also getting back in later on once you get to find out more information about the market. Remember, if you'd held this point, it would have gone all the way down here, scared you, and then it would have come up and you would have gone, oh, thank goodness, relief. 75 still in play here for black gold, US oil. It looks pretty strong at this stage. Hopefully it can get through to that level. And then I do expect some form of structural formation around 75. Time will tell, but the mainstream media is all over this one now. And you know, that always makes us nervous as a community. We don't want the mainstream media thinking anything that we're doing. Let's move over to AMC, and I've got some scary but interesting news here for AMC. We have a resistance. We clearly can't break through this 63.22 with the closure. You can see here in the 2 hour, the 4 hour, etc. It can't do it. And we have our support that's been support for a while, this 52.30. Don't ask me why it's exactly these levels, but we're putting it through the closure points. As you can see, what may happen here is double topping. So we've basically got resistance, we've got the intervening trough, and if the market breaks through here, what's going to happen? It's going to sell off. Now, if we take the range of that level and we think about where that's going to, it's going to point down to the 40 zone, previous buying at the 40 zone. So it may not all be bad news, but if we cannot hold 52.30-ish level throughout the next couple of sessions and it closes below, I could really see AMC selling off to the 40. I think you've got to be careful about that. But on the plus side, if it does buy off 52.35, let's say it hits it in tomorrow's session, closes above the 63, you're going to see all-time highs. Remember, channels go both ways, or double tops go both ways. This is a structural formation here on the charts. We've got two equal resistances, the intervening point. Let's say we do something like this. At this point, we've got 1, 1, 2, 2, and you can take that distance. So I think that it's setting up well here in terms of structure, but it certainly wasn't the stock that everyone was in yesterday. That was probably going to be Torch and Witch and things like this. So Wish, So Wish, amazing setup. Someone in the community bought this one up as a super chat during our live stream. I was very, I was feeling that $12, guys, I got to say. And when it got through 12, let's have a quick look now at the 15-minute chart just to show you how important this 12 was. See how it never closed above 12? Then suddenly it closed above 12, just here, and then it's on. This had increased chitter chat on the Reddits, on the stock tweets, on everything like that. It had increased volume, or at least stabilized volume coming through, and you were breaking a key resistance. It shows that when key resistance plus a series of higher lows was coming in, how significant this was. Favorite yesterday was Wish. Now, I don't know if you want to be in this type of thing anymore, but it just shows how great that setup is and how good it can be. GME, not impressive at this stage. It looks actually more short than long. We'll continue to watch this one with the chitter chat. I still think it might have a resurgence at some point, but we haven't seen a technical indicator to show us that just yet. Let's move over to Tesla, another stock that's very popular with the retail community. Decent day for it yesterday. I know it's down 0.4%, but it did okay. It held its own, and this is unusual. Tesla's sentiment has generally been quite bearish. A lot of hyper stocks were getting beaten yesterday while the rest of the market was going up. So for Tesla to show increased volume, basically a flat day, and its movement towards 635, you can see it was up at one point there. Once we clear this level, I'm super interested to be looking at Tesla. So hopefully we can clear this level, and remember to have your upward trend line here in play as well, just in case that gets breached, so you know that weakness is coming back in to the market. We'll keep watching this one, and when we get more information, we'll cover it with you guys. Let's now move over to one of the most popular indices right now, of course, the Nasdaq. Up, down, and all around. I think very hard to read on any time frame here. The only thing you really were able to do yesterday was to get through massive trend line here and say, okay, we have this massive trend line. Are we going to be buying off this zone? That's what happened. It purchased off that zone right above the previous resistance, which makes perfect sense. And yeah, it's super interesting to look at this chart, but all of the main interest was really in the Dow and the S&P 500. It makes perfect sense when you see those sell-offs. Just a quick reminder to everyone, we have this long leg doji on the weekly for the Nasdaq. This is the QQQ here. If we close above, decision made. I expect further bullishness through the end of June, obviously into July. July is usually a notoriously great month. But this doesn't mean that the market is healthy right now. We need more time to play out. Remember, breadth is a big thing. So while the Nasdaq looks pretty good, the volume's looking okay from this day, not from, of course, yesterday. That's looking terrible, but it may not be in yet. Then we just need a closure above here to really signal the market is ready to keep going up here for the Nas. Let's now move over to the US 30 though and have a quick look at this. So trend line was hit, trend line was fully supported, and boom, goes the dynamite. Big day here for the Dow. The Dow actually ended up with some decent percentage. I mean, in terms of swing, you saw through all the futures trade a 2.83% swing, which is no joke in the stock market. That's a huge one. So big pull up. Now, am I bullish for the next session? You'd have to start thinking maybe not as bullish as you think. So yes, that's a great engulfing candle, looks great off the trend line, everything, but it does come straight into resistance. And while the Dow has been tipping over, we got to think about all the stocks as well. So let's just bring up one of the stocks, for example. Let's bring up John Deere here. You'll notice this has still been weakening. Where's it come back to yesterday? The 20 moving average. Where's it been selling off recently? The 20 moving average. So yesterday, we knew that we would actually have a huge amount of support. We look at stuff like the XLF and we saw that support. Previous, beautiful support. Too fast to move. It's 2 steps down, 1 step back. So at this point, we knew that there was most likely going to be buyers there in Wall Street. And there may be another day of buyers coming through. But I always go and I think about, well, what just happened through the session? One of the things that happened is we filled the gap. So this is the quadruple witching day gap that occurred here on the S&P 500. It hit the daily 50, which you'll be able to see. There's the daily 50, previous supports multiple times, buying pressure, buying pressure, buying pressure, makes perfect sense. And then if we actually go and we think about what happened, it just filled the gap. So our aim yesterday was 42.20. It hit 42.20, went a little bit higher. Very nice. Congratulations to everyone that was taking that one. Very, very sweet. But will it hold through the next session? This is going to be where the bulls and the bears start to fight it out, because we have seen some weakness. The markets then picked up, filled the gap. Normal, pretty damn good. And it did it very, very quickly, which is also exceptional. But all of a sudden, most of those stocks are hitting resistances today. A lot of them are. So I think it'll be like a sideways, possibly even bearishness in terms of overall sentiment. However, I do still think we have to be cautiously optimistic here. Most of the market, even though the breadth is getting worse, does still have these buyers. Just be careful, though, with getting overly confident here. We've got to start thinking, hey, there's weakness coming into this market. We can see it in that breadth. Not every company's going up. Some are overpriced by huge multiples that we should be at, like Avis and other things that we should be able to figure out. So while they're running on their sugar rush, eventually they are going to fall over. Where do we know the bears get full control of the market, though? It's certainly not here. So we have to become optimistic still, because until the bears get through this 40,060, we don't know that the market is out of a bull trend. At this point, it's still completely bull. You can see the 20 moving average here on the weekly. You can also see all of the previous times it's picked up off the 20. Beautiful stuff there every single time. But look at this. This is why I'm so intently keen on this 20 moving average if it does happen. We've got 2 massive buy wicks, which signal perfect buying pressure for the next couple of weeks, if not month. If we ever closed underneath those, guess what's going to happen? I think we're going towards the 50 exponential. So with Michael Burry, with everyone else scaring everyone out there, these are the types of things that we want to be paying attention to. But for now, the Nasdaq still looks really good. The S&P 500 filled the gap. It's going to be tough to trade through the Tuesday session. We probably need more of the Asian European trade to figure out the direction we want to go. And we remain cautiously optimistic on the market, especially in things like US oil, etc. at this point. Let's move over quickly to BTC. Straight away, you'll see BTC shorts. It did it again. It gave us the fact that Bitcoin was going to go weak. This is actually not a bad indicator. Remember, it is a forward indicator, which means that whatever this is telling you, usually the market will not react for a couple of days. We saw that in our back study that we did. So this is now coming all the way back down to where it was before, showing that the whales are accumulating Bitcoin. And it makes perfect sense they're accumulating Bitcoin. It's back on its support. It hit 31,000, which is what we expected over the weekend trade. This is exactly the level that we expected some buyers to come in on. I'm not convinced based on yesterday's daily close that we may not have drive a little bit further selling pressure. There's that potential that we get through 30,000, spike low, spike high, and then begin the rebuild. And if that does occur, something like this, I'm actually going to be very positive on Bitcoin. So I would love to see that, even though a lot of you out there will probably downvote me for that type of comment, because this will show that the trap has been laid by the nasty whales, the nasty Wall Street, the nasty derivatives traders, and that we are ready to actually start to move up. And it sounds weird right now, but of course, when you start to look at the price action, you start to look at the psychology of the market, it's almost important that something like that does happen to give us the confidence. Thanks, everybody. Bit of a long video today. We'll see you in the live stream tonight, 1.5 hours before the market open. Or, of course, remember to subscribe for our daily recap videos. Speak to you soon.